All right, we're closing out the week with a whole lot to talk about, I suppose. Excuse me, 20% on the phone. Yes, obviously it's been a very volatile week, and the market has chosen to spill. And particularly, yet again, spill in the last 5-10 minutes towards the close. And it was an aggressive sell-off, and it's probably going to leave some people with a little uncertainty sitting in the stomach going into the weekend, just chilling there. But if you are with me, if you are listening to me, and if you are listening to the fundamentals, we aren't so concerned, at least in most areas of the market. Obviously, if I had something like Amazon, not excited about that. But I've been saying Amazon is not an exciting stock to own for several months now, and just look at that chart. Clearly not too exciting. But unemployment was less than expected coming into this week, and retail sales were very strong coming into this week, and durable goods were very strong coming into this week. So all of a sudden, people were like, oh wow, the economy is held up all the way, and it's about to be in a position where people are vaccinated. It's summer. There's going to be all this pent-up demand. People are just going to go out, and it's going to be essentially a boom in the economy. And you would think that narrative, nothing else, just that narrative, would lead to stocks rising. That's what the logical decision is, but that is not the case. Stocks decided to sell off, which I find incredibly interesting. It's unfortunate, and it's certainly a force I don't want to be caught up in. So, if there's something you don't like, I would cut that. It's not like I didn't do any selling this week and bought up everything. No, I raised some cash in case I'm wrong. As I said yesterday, I'm going to be humble about these sellers. They are powerful people. So, if I got to do something, I will. But I'm remaining mostly long. And I was buying today. I was a net buyer. And I suggest, if there is something, this does look to me like an opportunity. I do think, interest rates have gone up and are going to continue to go up. But let's be real. I don't think anybody wants, nobody who's watching me actually wants to own a US Treasury. And people are afraid that with Treasury yields rising, people are going to go from stocks to bonds because bonds are going to present a very good investment. And I want to address this point. I don't think anybody who owns Amazon is trying to sell their Amazon to buy a negative real interest rate. 1.5% negative real rate. Average rate of inflation is 2%. It's probably going to be even higher than that. So you're really getting a negative real rate. I don't think anybody who was previously owning a company like Amazon, like any CRISPR stock, any stock is going to take that stock and decide they all of a sudden want a US Treasury. Not the way it works. At least I don't think it's the way it works. In addition, one of the reasons why Treasury yields are probably going up is because of thoughts of inflation. But when inflation occurs, prices increase. This improves earnings for companies. And guess what? These are called stock prices. So inflation will also benefit stocks. I think it's a Goldilocks environment. And this is simply Michael Santoli of CNBC put it very nicely, a boot and rally. This is literally people pulling trig, and it's a yak in the market. And it's crazy, in my opinion. And it just has happened. So, it's possible it keeps happening, but I do think the fundamental environment for the stock market is still good. It really is still good. We did not get to this point because we feared a lot of stuff was going to happen. A lot of stuff was thrown at the market, and yet the market digested it. Now we get good stuff about the economy being strong, and the market freaks out. So I say, let's put a pause button on things and realize that the market is reacting to good news, which is crazy. And it's just people are looking at the current price and saying, wow, it's so high. Well, guess what? Inflation makes that justified and is probably going to make prices continue to rise. So, be prudent with your stuff. I've been saying not to own Amazon for several months now. I've been very bullish on energy for a long time. Energy is doing well, at least this week. Real estate is doing very well this week. Gold miners of the three, I have said 3 stocks or 2020 areas in the market or 2021 areas in the market. Real estate, energy, and gold. Real estate and energy have been doing well. Gold has not been doing so well yet, but just you wait, in my opinion. Look at the price of copper. Look at gold and inflation correlation throughout history. We're going to be 3 for 3 on this one, I assume. We will see what happens. I am remaining long. That said, if you have a position you're not feeling in your gut, you're just not, doing it, even if you have a loss, because oftentimes those positions are the best ones to cut it and use this opportunity to put that capital elsewhere where there's good pricing. I suggest energy. So with that, wish you the best. Until next time, peace out.